Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Danny Akuye along with
Juliet Sarli. Hey, Danny. Well, of course, a little bit of a cautious day. I guess we're waiting for that PCE data out of the US later this week and in GDP data as well from America.
Absolutely. In spite of the fact that our inflation reading was a little bit lower than expected and the RBNZ came out with a slightly dovish tone, it wasn't enough to get our market going today. So let's have a look and see where the SIBO 200 is currently sitting. And Jules, look, I'd say that's pretty flat, wouldn't you? Down 3 points.
Yeah, absolutely. Just having a quick look as well as to where the ASX is, down 10 points, about 0.1%, 7,653. And you had a really interesting take that you read about platinum locks.
I know, I love that one. Platinum locks. So instead of Goldilocks, apparently a few commentators are getting so bullish about this soft landing scenario globally that we've now heard of platinum locks. And as someone said, contrary indicator, when one gets that bullish, maybe just be a little bit careful. And it's also interesting that both the CEO of Goldman Sachs, David Solomon, and the CEO of JP Morgan just pushing back against that Goldilocks, let alone platinum locks scenario.
All right, well, maybe that's why we had the steady Eddie day that we saw. But one sector that got some love was lithium. So certainly looking a little bit brighter. Morgan Stanley had a pretty positive note coming through on lithium, and a lot of our stocks here did well today too.
Yeah, it's really interesting because I was trying to get to the bottom of why the lithium prices were going up in China. No one could really give me a definitive answer, but the fact they are going up is obviously
I think the Morgan
bullish.
note overnight was really kind of interesting because that was also what spurred a lot of the momentum coming through in the US stocks. They just basically said that they were a little bit more positive on the commodity, which of course is down about 80% from its highs. Let's have a look at some of the lithium stocks on our market. And I was talking about Rob Shears, you can watch that online as well, about some of his picks globally. He likes Albemarle, SQM, but here locally, Pilbara did very well, up almost 7%, Mineral Resources up 5%, and Liontown up by about 10.
Yeah, I can feel those those shorters getting burned on the likes of Pilbara Minerals. Let's have a look at the telcos today. It was notable that Telstra was going ex-dividend today, which may have caused that sector to go down. No, we're not going to do that one. Maybe we'll have some luck with the travel sector because we did have corporate travel.
Yeah,
no, Flight Centre.
So Flight Centre returning. I don't know if we have the travel. We do not, apparently. Things are a little broken here. But, Flight Centre came through with its numbers. We'll get across that a little bit later because it was the stock of the day as well. But what was really interesting about that is obviously the fact that we have seen such demand for travel coming back. Did see profits soar, if you like, but total transaction values were lower than what the market was looking for. So shares were down.
Shares were down, absolutely. But we did have a busy day, didn't we, Jules, for lots of corporate stories, and Neuron Pharmaceuticals have fallen by over 10% after US sales of its debut drug were below expectations.
Kelsian also tumbling down almost 13% following its weak result in the first half.
And Light and Wonder, which I was just chatting to with Will Riggle from Climb. Check out that interview that we had just then. Basically, that jumped by about 6% after swinging into profit in 2023.
Helios down 8%, so adding to the 9% decline yesterday, it reported a $636 million loss and a heavy write-down in its pathology division.
And Perpetual, the wealth manager, those shares off by just over 2.5%. Now, they have declared a 65-cent dividend following a jump in profit in its half-year report, but they're keeping stum on the strategic review that would result in the separation of the corporate trust and wealth management businesses.
All right, let's get to our guest. Rocco Panzarita from Macro Capital joins us now. Always good to see you, Rocco. We've been talking quite a lot about the fact that it doesn't look like there's going to be many Australian building companies left. Your take?
Yeah, not too many at all after we've had a recent CSR bid. I've been loving the sector for quite some time now. I think construction and building materials as a whole is a lot of what this country's about was built on, and it makes up such a large part of our GDP at 10%. And speaking of Saint-Gobain, I thought I'd mention that they even said that the construction market in Australia has a lot of strong fundamentals, supported by a lot of the solid macroeconomic factors, including a growing population, underpinned by immigration and increasing need for light and sustainable solutions. I think there's really strong signs that have been displayed over the past year and are going to continue to be displayed throughout the next few years. We've got a lot of factors at the moment, like a lot of increase in job requests on, say, the high pages. They've notified that they've seen an 8% increase year on year for advertisements for trades and these sorts of things. And the government is committed to build about 1.2 million homes over the next 5 years. Now, this target would actually require record levels every quarter to achieve this, while some of the opinion that we probably won't get there and build that many houses in that time, the demand's definitely there. So we've got really strong demand obviously coming from overseas migration, and at the moment on the cards we have about 10 billion in takeover deals for just between Boral and CSR at the moment.
I know, it's crazy. All my old companies that I used to analyse, they're disappearing.
Yeah.
James Hardie's still around though.
They are, and John's Ling Group as well, who've reported quite poorly. We've had a miss on expectations there across the board, and really making that switch towards more catastrophe reconciliation and making these sorts of deals with a lot of insurers. They've recently extended one of their contracts with Suncorp for another 3 years. It's been going since 2018. Their business model's largely shifting towards, as I said, the catastrophe management and more away from the commercial aspect of their business, which I'm not too fond of at the moment. That it can be fairly cyclical if there's not a lot of natural disasters, but they've got some great deals in place with, say, Suncorp, for example. Any damage over $100,000, basically got the contract for the next few years. As I said, quite disappointing results as well, with revenues, profits and earnings per share down from the last report, and even quite a large miss on expectations with earnings per share at 8.4 cents, whereas analyst expectations were 10.5. So much prefer the same building materials companies rather than direct builders themselves.
What about Brickworks?
Yeah, Brickworks is a company I've been looking at quite a lot recently. They're the market leader, which is what we like to stick to. They're holding investment, quite a large holding in Solpats. They own about 26% of the business, and obviously have that agreement in place with Goodman Group as well, which has been quite fruitful for them over the years. What they're doing is essentially purchasing land, excavating that, pulling out the clay and all these sorts of materials for their brick products, then selling the land to a joint venture trust with Goodman Group, in which they're refilling, developing and selling and renting out to blue chip customers like Amazon, Woolworths, Coles and these sorts of things. They suffered with their last report with their margins impacted with a lot of inflationary pressures. Cost pressures increased across the whole supply chain, and their plant utilisation was quite disappointing as well. They're only using about 46%. That increased to about 72%. They're due to report actually in the next few weeks, and I think that a lot of these macroeconomic headwinds that they were facing over the past year have eased a little bit. I think these inflationary pressures have come down. The logistical nightmares that they were having before have settled, and wouldn't be surprised if they have a strong report come mid-March.
Cool.
All right, Rocco, thanks as always, Rocco
Thank you.
Panzerino from Macro Capital. Let's get to the stock of the day, which was Flight Centre.
Just be careful looking at that share price chart. A lot of our members on Stock Doctor have said it looks like there's great recovery still to come, but on an enterprise value basis, I think the business is actually worth more now than it was pre-COVID. So just consider that. But there actually has been opportunities for consolidation and improvement in market share and in that corporate travel business as well. So I think the future of this company is bright. It's always been a pretty good company, but like I said, you're really betting on that margin story here. So happy to hold it. Let's wait and see how that goes in the second half.
I still think that people will continue to travel. There's no doubt that people are placing great emphasis on experiences and maybe cutting back in other areas. So it's hard to say, but our preference is Webjet just because of their Webs business, which is basically a marketplace for travel agents to go and purchase bundles and airfares, etc. Corporate travel is more aligned to the corporate space, and that had a pretty tough update recently. So our preference would still be for Webjet in that space.
Yep.
Okay, shall we have a look at what were some of the market leaders today? And Jules, Chalice Mining on a bit of a tear there, up 25%. Now NextDC up 12.5%. So I chatted with CEO Craig Scroggie today. Definitely worth taking a listen to that one. My gosh, I did write about it in The View, couldn't help myself, only because the demand for digital infrastructure is going through the roof at the moment, and Australia is quite lucky to have a few beneficiaries, one of which of course is NextDC, which came out with better than expected results. Also in the lithium space, we're seeing a Liontown Resources up by almost 10%, and Pilbara Minerals, those shorters getting squeezed, almost up by 7%, and PolyNovo, we haven't seen that one for a while, up 6.5%.
Yeah, I think it tanked yesterday, so coming back a little today. Let's have a look at the laggards as well. Kelsian Group, of course, was among the companies reporting as well today, and it had a weak result, sending its shares down by about 13%. Neuron Pharmaceuticals, we talked about US sales of its debut drug below expectations. Helia Group, I spoke to the CEO yesterday. They're actually doing quite well yesterday, so a bit of a sell down today. Helios is lower as well. And Fortescue, was it ex-dividend?
I think that might have been an ex-dividend, because it was worth noting that we are actually in that ex-dividend period. So if you are looking at some of the shares and wondering what's going on, so today in terms of ex-divvies, we had Beach Energy, Fortescue by $1.08, and we also had the likes of Telstra, that was also off, and I think Tabcorp and Woolies as well. So big companies going ex-dividend. Jules, should we have a look at the smalls? See what's happening in the smalls.
Oh, there we go. Chalice Mining, so nice. We see it twice, up 25%. Appen as well. Drone Shield, I spoke to the CEO. That was their maiden profit there, and they've increased their workforce by, well, they've doubled their workforce basically. They've now got more than 100 employees, up 21%. Gallon, Lithium and DGL also looking good.
And some of the laggards in terms of the small caps, Trajan off by about 23%, Next Science off by over 10%, and Closed Loop off by 8%. And if you're interested in small caps, I did have quite a few small caps on the close, so make sure you check out some of those ones, including Swoop, which is a newly listed telco company for 2 years. And isn't that terrible?
It's just you've done a lot. You've done a lot straight after each other. So anyway, they're all obviously on the website. You spoke to Chris Scarpoto from Alvia Asset Partners as well. Quite a lot going on.
Absolutely,
yeah.
A lot of stocks. So
yeah.
My brain has obviously had a bit of a meltdown. But look, let's see what's happening overnight, because it is the all-important US GDP data, and also I think is PCE.
PCE is
Thursday.
Well, Thursday our time, so
yeah.
Wednesday. Yeah. Oh gosh, I'm getting confused.
Yeah, I thought it was out on Thursday. Hold on, let's just have a quick look in terms of when the PCE is out. So we don't lead. No, it's out on Thursday. Yeah. So US GDP. Also US advanced goods trades balance. And we do have, when we're looking at big companies to report, Salesforce, which is now in the Dow Composite, and Snowflake, as well as Paramount reporting earnings.
And so many earnings out here tomorrow. I just actually couldn't even fit them all in. But Harvey Norman, Karoon Gas, we're going to be speaking to Karoon. We've also got retail sales and private sector capex being released, a raft of ex-divvy stocks as well. Japan industrial production and retail sales, and those all important China PMIs. I was talking to Tim Davies from Carrara Capital earlier about China. He was saying, look, particularly the market roaring to life for the kickstart of the year of the dragon.
I think the authorities might have a little bit to do with that.
so-called national team just making things look shiny to start the year of the dragon.
Okay, let's get a final check and see where we are as we go into the close. There we go, SIBO off by 2.5 points, so Jules pretty much flat. ASX 200, have we had any change there? Just checking. That one currently off by 2.5 points. Just worth noting, the Aussie dollar under quite a bit of pressure the last couple of days. So the Aussie dollar are down to 65.16, off 0.4%. And I actually think it's an unwinding a lot of that hawkishness for some of the traders that was in RBNZ, because they've come out, they didn't hike rates, a slightly more dovish approach. So there we go, we can all breathe a sigh of relief until we get the PCE in the US.
Yeah, now we've got something to ask from you. Our annual survey open until March 11th. We'd really love it if you could take a few minutes and fill it out so we can make ausbiz better for you.
And to sweeten the deal, someone is going to win a managed investment portfolio from MPC Markets worth $5,000. And there are other prizes too. So just go to ausbiz.co/survey24. And you know what? We can't go in it. We can't win it.
What? They're not going to let us win the prize?
Which means everybody else out there has got to get their names in and potentially win that fabulous portfolio. Well, Jules, I think that's it for this.
That is.
We've got a leap year, don't we?
Yes, actually, it's one of my friend's 40th birthdays, but actually,
she's
probably only like 10, right? Because she hasn't had many birthdays.
And we have a special, I think, called tomorrow, a leap special with Mark Gardner and Jessica Amir. So apart from all those earnings results, as we draw the earnings season to conclusion, because of course it's the end of February tomorrow, but we will have that special call and lots more.
Absolutely. And so we'll see you from 9:40 a.m. Eastern Time tomorrow. Have a great evening. We'll see you then.
Have a great evening.